What is my account size? My account size is none of your business. I've got one 50K account with Funded Next. I've got a 100K, well, slightly over 100K with Darwin. And I've got a different account I keep private with some investor capital in. And I've got a fourth account. I don't really use that these days because I'm liquidating it. Cool. Guys, Chris is here. So I will leave you all with Chris. You're in great hands. Don't leave when I leave. Guys, I will see you all very, very soon. Thank you for having me. You've been a great chat as always. Have a great day. Don't get margin called. Stay safe.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, what's happening? Happy Wednesday and happy Wild Wednesday. We have another ridiculous gap to the upside, just like we had gaps to the downside. This market just doesn't like to do anything unless it's non-opening to closing bell. So last couple days, gap lower, push all day, gap higher, push all day, gap higher, a little bit of a reset, neutral. We're coming close to our Wednesday swing high, which would have been April 9th on that fateful day of a 90-day pause. And here we are again, softening our stance on China. There's no way it's going to be 145%. We're not going to fire Jerome Powell. It's like, I don't know what you call that, but I would say crazy comes to mind, because why would you say things that are going to be taken by the news that are going to be the exact opposite the next day? So here we are. Markets are pseudo excited about this kind of relief and maybe a little bit more certainty on like, hey, it's not going to be as bad as everyone is thinking. There's still a lot of technical resistance in the near term. I mean, look, if we somehow surprise today and get up to, this Wednesday high, which is around 54.82. I think that was the futures high. This is actually 54.80 or so on the spike. But you can see all this past support to become resistance. The blue lines represent my SPX sell trade this morning. I'm holding a couple SPX trades for right now. This is my call side. That's my put side. Looking to see how this plays out for the morning. I did get a really crappy fill. The market 5 minutes into the open spiked aggressively, and it kind of threw off my fill. So I'm just kind of riding this thing out. I'm sitting break even on this trade and about $20 down on this trade. So I just need a little bit more time to get out the premium. I did close out some profit today. My puts on SPY and Qs. That's an update for Pulver alerts. So let me put on, I don't know if I listed it as a naked put or if I listed it as a cash secured put, but I did that during the big VIX spike. I was selling puts on SPY and QQQ. So I think I put cash secured put. Yep. So I found it. So I'm going to jump into it. It was a 523 expiration, 435 put for $4 credit on the SPY, and a 523 expiration, 365 put on the Qs. So collectively, that was $8.25 credit. I closed them each down for about an 80% win. So that profit looks something like this. It was about $8.25 credit, 80% take profit. Close it out for net $6.60 or so. So I'm going to jump to that trade right now and close this one down. This will be a reply. Trade update. Closing SPY and QQQ. Cashiered puts. So a SPY entry 4.06 credit, closed for 84 cents debit. QQQ entry 4.18 credit, closed 74 cents debit. Taking the win. around 80% max profit rather than waiting another 30 days for full expiration and the remainder profit. All right, so that is updated. Posted a trade yesterday in AMD. That's a new trade. That one's actually already showing some profit. And P&L, doing fine, hanging in there, up around 83 grand year to date. I'd like to still see my high watermark at 205. I took some losses. I mean, I don't think it'd be foolish to say like, oh, I didn't take any losses during the sell-off. I definitely did. I had some income trades that didn't work out. I'm in Tesla right now. That we had it kind of a. I think the good thing about Tesla is it showed how beat up the stock actually was because it had terrible earnings. We missed EPS by 34%. We missed revenue by 9.1%, and the stock is actually up. So why? I have no idea. I don't care. All I know is that I've got a cover call at 257.50, and my break even is 247. If I get it called away, I'll make 5 grand on Friday. If it doesn't get called away, then I'm selling premium aggressively, and I can. I mean, the nice thing is I'm not battling Tesla with some terrible, $150 put that's like, oh crap, we're down to $200 now. That would have been a little bit more difficult than what I'm dealing with right now, which is, I mean, hell, I might get called away. So 257.50. That's my covered call this week. So if it gets called away, okay, fine. I'll flip for 5K, and it took me 4 days. So there's definitely worse problems to have. So I'll see what it does. But I'm going to keep a close eye on these trades this morning. See if my levels will still hold. Let's go top down. Let's chat. So last couple of weeks, and a lot of these live sessions, the last couple of weeks, this is what I talked about. Once we put in a bottom here and we had that pullback, I wasn't surprised that Monday. I said Monday either going to be a wave structure. You go back and check these sessions, but you have to look through a little bit of the noise and see a swing pullback. This is a flat pattern that's going to retest the high. Well, we did so in a gap type fashion, but that's what the market does. Point is, prices are going up. That's helping assets. We're right back into a 200 moving average on the daily time frame, or the 1 hour time frame. But if you go to the daily chart, I think this is where the market comes back and finds some noise. So if we go support here to become resistance, that's clearly a hurdle that the bulls have to overcome. They may struggle at that price level. If we get into this chop zone between 55 and 5,700, that's around the 200 moving average on the daily time frame. Again, we did experience the death cross, which is the 50 and the 200 moving average crossing over. So even a pullback, I mean, look, tariff optimism spurs Trump softens tone on Powell. Yeah, he said that he can't fire the guy. Well, we all knew that going into the quote ahead of time, but you never know. He preaches crazy enough that sometimes you got to listen, and you have no choice but to listen. It's the one president that's on the economic calendar for whatever reason. Like it just drives me crazy. But it's like everything that has been said is now being backpedaled. It's not a surprise. It's just what we've been dealing with is a lot of market chaos and a lot of noise and volatility, and all that was created from this structure having this low to high. All this is noise. Now the good thing is noise is heading higher, so that's fine, and it's given a little bit of sense of relief. I'm certainly going to use this to get more capital, have more cash on hand, get ready to deploy it, pick my battles. I don't feel like I need to call tops. I don't feel like I need to call bottoms. I think that even if the market is going to go into resistance and sell back off, I still am interested in, maybe this area as a support zone, and maybe this area as a support zone. What would make us retest the lows again? I don't know. Because right now, I mean, the Fed is likely not going to have to do anything until June. If they start cutting rates, they're not going to be pressured and strong armed into cutting rates early. Trump is clearly backpedaling on the severity of tariffs, and especially the plays with China. But earnings is maybe the next piece that everyone's watching. It's like this week we had Tesla. Thursday we have Google. Next week we have Amazon, and Apple and Meta and Microsoft. So we have 4 Mag 7 stocks next week reporting earnings. And I know that's not the most important thing because we should have a broader market consensus. But if Mag 7 is still strong, I think that's pretty encouraging that there's, good stability. Things have been beat up. There's a rotation that's necessary. And then we can see where the market settles back in. Okay. Alan's asking, do you think this is sustainable? I mean, no, I don't think that anything about this is sustainable. So it doesn't make me a bear, but I think that the market's going to struggle here because the reality of the situation is right now the US has played its cards, right? We came out swinging with all these threats, and all of a sudden we've showed our hand, and that is, well, we're willing to backpedal everything we say. Um, I don't know how that's taken globally, right? I mean, it could be like the U.S. is losing all sorts of integrity with global trade. The U.S. is losing all sorts of. I mean, the question this year is the dollar is losing world reserve status. Certainly seems like it when it's down to the worst start since 1995. The dollar index is down 9%. Gold has been ripping like crazy, outperforming. Arguably, this is insane over the last 20 years. If you look at GLD versus SPY, gold has actually outperformed SPY. Now, it didn't happen until this year, but the fact that if you have a portfolio with gold exposure and now 20 years into it, it's like gold has overtaken the S&P 500. That's crazy. So, point is on the technical side, we have a death cross, we have a lot of resistance ahead. The bulls are going to have to prove beyond a shadow of a doubt that they have what it takes to get above 5,700 without being a bull trap. I mean, I think that this is a bear trap area. I think that this is potentially a bull trap area. But the pain trade right now is probably risk up. Like the pain trade is up. Why? Because everybody's bearish. AAII sentiment is, weeks and weeks and weeks of red. It's like over 50%. I think that's like one of the worst streaks we've ever had. Let's go to Edgefinder and see what AAII says. So let's go to sentiment and AAII here. So how many readings in a row have we seen? I mean, this is pretty terrible, right? 1, 2, 3, 4, 5, 6, 7, 8. We have 8 readings in a row over 50% bearish. Probably the worst this AAI tool has ever had. On top of that, you have the University of Michigan Senate report, which is the second lowest reading ever in like 50 years. So the pain trade is the contrarian side of that. If everybody's bearish, well, the market probably finds a way to melt up. And we have been talking about this. Is like, how does this market melt up? You backpedal the narrative, right? Instead of it being so doom and gloom, it's like you say, yeah, we're going to find a way to work with China. We're going to find a way to compromise and have a happy medium. Boom, market's excited for a second, but enough damage has been done. I'm not super convinced that this market can get and exceed this level. If it does, pleasant surprise, yippee skippy, but I'm super skeptical at these highs. If we got to those highs, I think this would be a high swing that nobody's really going to be ready for, but I just don't see sustainable runs. So first things first would be we have support become resistance right in here and right in here. So, today with the big gap up, I mean, the market's already up 3.29%. Is it possible we go higher? Sure. I mean, we saw a 6 to 7% intraday move on April 9th. I think it was like a 9 to 10% move from low to high. I think the Nasdaq was 12%. I mean, one of the most wildest days I think we've ever seen. It was definitely a historic day, but not without more noise. So this high is 54.81 on SPX. So do we end up tapping that today? Is that a little resistance zone? Do we run into here's some gamma levels, like 5,500 is a pretty big level that I think could get hit today. In fact, I'm gonna find out if I can trade it. Let me see if I can play a little butterfly to it. Today might be a little risky because I've got some sell side premium. Damn it, I'm not gonna. If I put a butterfly spread on, that would offer a nice reward to risk. I'm kind of chopped up around that zone, so I can't really put on the trade now. Could I pin this one? So I mean, I guess I could do this. I could do this is a terrible trade, so I'm probably not going to take it. But if I did a butterfly spread here, 20 cents to potentially make, $450, but I've got to be spot on with this. Realistically, it's like if I turn, 20 cents into 40, 50, 60 cents, all that is price would run up to the 5,500 zone for the day. That's all it is. So, I mean, I could turn a very cheap debit into maybe a few dollars today. If we're going to find 5,500, it's just going to be going through that level. So let me see. I don't know. The only reason I'm taking it with I'd like to go 10 wide, but that's going to mess up my uh, iron condor that I put on this morning. So if I do it really narrow, also I'm noticing that the bid mid ask is quite wide. Um, I have good trades running like a Tesla earnings trade, Netflix earning trade, Verizon. I'm not getting filled on any of the mid prices. I'm having to like penny myself down, go a little bit lower on the fills, and even the fills that I got on those puts. It's like they were okay, um, but it took me like a couple of different trades to like cancel replace until I got filled. So anyway, point is with this little butterfly, would I want to take the trade and risk 15, $20 to maybe double it? I mean, it wouldn't hurt if we're going up to hit this strike. I think we get in the way, but yeah, that's probably the trade. So see if I can throw this in for like a 15-cent debit. I'm going to go 2 contracts here. So 15 debit, not filling. Let's go 20. All right, it's got filled for 20 cents. I'm going to set a chart alarm at 54.90 and check this price. So 54.90 is not that far away. It's only 20 points high. Tesla crossing 257.50. Cool. Basically, my job is to not get in the way. If this market's going to have this relief rally, great. Let's have the relief rally. I'm going to set a chart alarm here at 54.90 and check the butterfly spread. If that level gets hit, that would be also up above. Right here's the Wednesday high around 54.81. We're trading at 54.68. So right here is the Wednesday high. I mean, we could push into there. I do see a nice little gamma level around that 5,500 zone. If we cross 54.90, then I'm looking to hopefully double that butterfly with an out of the money move. It'll be close. Okay. All right. So chart alarm is 54.90. Must be it didn't trigger that alert. So 54.90. Check butterfly. Okay, very good. Tesla closed out shares, and let's see what I'm doing with the remainder position. So we're 257. These are the trades that I'm watching. I have a modified collar trade, which is I've got a call at 257.50, which is now like, oh crap, I'm down. Well, my break even is 247, 247 and change. So I have the protected put that is down. I have the covered call, which if Tesla looks like it's able to get to 260, 265, maybe I roll it and do like another. I might roll this down in price, but out in time and take on another week. Going out to May 2nd might not be awful, especially if we're entering to like buyback zone and earnings next week come in pretty positive for the Mag 7s. So I might look to roll this. I don't know. Let me play around with this for a sec. So if I go 257.50 and I roll this by a week, so I can roll this to the same strike and make another $5 on this trade. I can roll this down to 255, which brings 250 to, it's going to be an offset of, so I'd have 626 minus 250. It basically gives me a net $376 more. I do that on 500 shares. It's like, it's another $1,800 by waiting next week. I don't want to get too cute with this because I do have some May 16th expirations at the 255 handle. So it might, I mean, it might be in my best interest just to let it get called away this week and not worry about it. I'll make 5K and then I can worry about the ratio spreads I still have running for May. So I still have some exposure like this. This one should be fine for May. This one should be fine for May. 245 is my 111. Bull put spread, bull put spread. So 245, 245. Yeah, so 245 is my line in the sand out to the 16th of May. We'll see. So I mean, it might be an interesting trade where it's like I take Tesla stock, I flip it for profit, take Tesla stock, flip it for profit, and do it again for a third time. It's kind of getting exhausting doing that, but if I flip it for profit each time, it's not the end of the world. And if I lower my cost basis in the low 200s, it's not a stock. I don't mind sitting on the stock, but I just want to make sure I'm lowering my cost basis. So all right, to be continued. Let's talk gold. Everyone's least favorite. So S&P up 3+%, Nasdaq up over 4%, Dow's up 2.83, Russell up 3.64, VIX getting smashed lower down to 27.49. Nice to see some fresh lows on the VIX. US 10-year spiked down to 4.25, then came right back up to 4.34. The nice thing is we did at least gap a little bit lower. I'm curious what TLT is looking like. Jeez, oh Pete, man. TLT with a big gap up and it's still fading. So we gapped up on TLT around 2.82%. We are fading pretty quickly. That's where you're getting the jump in the US 10-year. So 10-year at least gapped lower, but it's still very, very sticky. Global bond yields are going up, which is why the US 10-year is not falling the way that I'd like it to. This is a super disruptive price action. This has messed up everything from 5 to 30-year financing terms. This is going to be messing up the refi pocket coming in, July to December. I hope this gets better. I keep looking back at where we were Liberation Day before everything got, screwed pretty much. So anyway, 20-year and 30-year. I mean, this is wild, man. The 30-year was up over 5%. The 20-year is up over 5%. I hope yields don't go higher. I know that's the big contrarian macro play right now is that the Fed's going to start cutting, but yields go higher. Nobody knows. Okay. All right, let's go gold, silver. So let's go dollar index first. Dollar index, as I said, if you're short the dollar, protect your profits because we're probably going to get a reversal. And as I said, reversal as in a pullback doesn't mean that the dollar is all of a sudden making a full recovery. Look, there's lots of areas to be a dollar seller. You can sell the dollar in here. You can sell the dollar at the backside of this trend line. You can look for any type of price action that starts to confirm and roll over. Plenty of opportunity to sell the dollar, right? I mean, in fact, this has been dropping so aggressively. Don't buy the dollar unless you are confident with the pattern down here to get a short-term rally, or you're getting price on the right-hand side of this trend line that's going to stay here and offer up a low. But I would not be a buyer of the dollar unless this is a swing trade on the right-hand side of this trend line. Okay. In fact, there are so many stocks, so many instruments you can look at. Just draw a trend line. I mean, look at the. I'll go XSP, so it's a little bit easier to read. Okay. Right now, to Alan's question earlier, is this sustainable? The only way I'm saying this is sustainable is if the market breaks this trend line, right? I mean, you can run into support becoming resistance there. You can run into the 200 moving average becoming resistance there. This could be the ultimate bull trap setup where the market comes up and finds the 200. It's like, oh, it's breaking the trend line, and then boom, retreats, right? So I think that to me, the bulls. So this is XSP, which is like your mini SPX. The bulls have to be above 580 in order for me to think, hey, maybe this market really did turn the corner. And that sucks considering we're down here at 480. That really does suck. Okay. But the reality is, having this high and this low, and we're sitting right in the middle, this is the perfect zone for bulls and bears to fight. And I don't know who's going to win because I've seen plenty of cases where, why would the bulls win? Because all this wasn't as bad as it really needs to be. Okay, fine. But that's one thing. I mean, because I guess you add some bullet points of like, well, the U.S. economy is pretty resilient. Now global trade is starting to get better. It's starting to go. Negotiations are opening up. Are they though? And I think on the other side, the cons, like that's what's scary to me is like the pros and cons list of this market. The cons are way bigger than the pros. So if we don't have like impeccable earnings, and we don't have, I mean, hopefully halfway the point of this year or later this year, we don't see like a fairly accommodative Fed, as well as lowering inflation price, or like seeing lower inflation and lowering costs. Um, I don't see this market justifying higher highs. So we have a lot of work to do on the bulls. The bulls have a lot of work to do. Now they can come back up, they can find all these levels, but I mean, it is what it is, you know. So anyway, if it doesn't break this trend line, there's no buy. If we break the trend line but we hit resistance, don't be surprised if it's a fake out and a bull trap. So I'm still pretty skeptical of how much higher these bulls can run. You know, days like this where it's just large gaps, um, I don't know how sustainable that is. You know, I think that this gap becomes filled at one point. You take a look at a futures feed. I mean, zoom in. I'll just go to this feed here for ES. Okay. I mean, we gapped higher on futures, for crying out loud. So, I mean, one thing that we see a lot is there's a kind of a purity and efficiency to futures trading. Just make a note right here. We're probably going to fill this gap in the futures market. And where would we fill that gap? Well, we might run up into this resistance zone and then fill that gap, right? Would anything change? It's just a bunch of noise. You got intermediate lows here, you got highs here, and we got a gap sitting right in the middle. So it wouldn't surprise me that like today feels good, but we're having heavy resistance right around the corner. We had a gap fill that is pretty obvious. So who knows? You know, it's like it's so hard to predict 2-3% gaps, and watching these markets rip intraday. It's not easy, you know. So all right, let's keep going. So oil is turning a little bit. A couple things I would still consider on oil is I'm not ready to take the trade yet because I think the reward to risk is pretty terrible. But if somehow oil were to come back down and revisit the lows, I might look at a 1-1-1 trade or a 1-1-1-1 trade, and that is where I would have a debit spread, have a wider credit spread, see if oil can hold the levels, and try to generate some profit. So right now, if I did that trade, 55 bucks, and I want to look at it. I don't think the reward to risk is going to be fantastic. So let's go CL for futures. I'd probably go out at least 30. I mean, I don't have the expirations that I want. It's either, May 19th is 26 days out or it's 54 days out. Now I'm going to collect a little bit more premium on the 54-day trade, but let's have a look. So if I did, let me look at the deltas here. So this, I mean, the futures contract is way pricier. If I flip this around here, put wise, so 55 is the low. And if I did, I'm just depending on, it depends on the credits that I can receive here. If I did like a 57 by 57.50 by 57, that's a potentially a $500 profit. And if I sold another one, but now I need to widen this. So I go here for a credit, that's $100. Like this isn't a bad trade. If I'm right, I make $100. If I'm right with the profit trap, I make $600. My max loss would be $430 if price is below 55 or 56.50. So that's right around the lows out to June. That reward to risk is not awful. Income wise, it's $100 over a 54-day window. That's not a terrible trade. Let me shift this down one strike. It's about the same. Probability of profits around 75%. I'm clearly playing with a little bit of volatility on oil. This to me is a better trade if we were closer to the levels now. So rather than forcing a trade, I mean, I don't mind I don't even think I can get filled at 10 cents actually, now that I see this. So if I go a little bit wider, now I make $200, but I'm pretty much doubling my risk, which isn't bad. It's still less than 1%. I don't mind this trade actually. Is something stupid going to happen in oil? I hope not. I would think not over 54 days. But I'll do this. I don't like the reward to risk profile right now. I think that if oil were to come back down to the lows, I will take a similar trade, but do it from a better price. Instead of doing that trade now at $62, I'd rather do that trade when price is closer to 57 or $56, then go further out of the way to see if that actually puts in a low. Um, maybe. So this isn't terrible for some income. If I can get 10 cents, I don't mind this trade right here. This is a small risk. Let me see if I can get filled for 10 cents on this trade. 10 cents. See what this will fill at. So can I get filled for 10 cents? Pending order, not filling. Let's try to go to 9 cents. I mean, like after fees and everything, it's kind of lame. Let me do this. I'm just gonna let it marinate for 10 cents. You see, actually, I'll do this. I'm gonna put in a pending order here at 15 cents. That to me is worth it. So if price falls a little bit, I'll put a pending order in at 15 cents. So if price were to fall and help me increase the value of that trade, if price falls on oil, I get filled for 15 cents. That's $150 credit with a potential $650 max profit for a risk of about 400 bucks. I'll take that with about a 75% probability profit. I'll take that trade. So pending order at 15 cents on CL. I'm looking to see if we put in a low. Okay, that's oil. That'll be pending. Gold. So dollar pivoted hard and gold is also pivoting hard. Right now, I mean to be fair, look, I think gold is still going to pull back to the 200 moving average. I don't think this is necessarily the start of it, but we have hit some bubbly territory where it's like, look, if you like gold and you think this is a safe way to hedge the portfolio, then buy the dip. I mean, if you buy some gold here and it goes up to 4,000, you're freaking happy. If you buy some here and it comes back down to this low and you buy some more and you buy some more, you're going to be fine. Like longer term, I still think gold is a very good trade, but you've got to be prepared for potentially a 20% pullback. Like it's not a small correction. So I don't think the dollar necessarily pivots that hard. I don't think that the stock market necessarily pivots that hard. I don't think this back and forth between China, the U.S., and the entire global economy and liquidity is done. But a little stab at these levels like wouldn't be a terrible spot. So GLD, I'll make this even easier because this is the same trade with shares. So I would be interested in a GC futures trade. Okay. But it's the same idea. If I started a GC futures trade here, I don't want to have any type of risk until price was all the way down to this low. Like that's how much wiggle room I want to give this thing. Now, I don't think I can get that trade, but I'm sure as heck going to find out. If I do a 2,800 trade, how far out do I have to go on GC futures? And this reward risk might be awful, by the way, but I'm going to take a look. So if I went out to 188 days out to October, I still think this is a good scenario for gold to have some room to run. And we were down to the 200 moving average around 2750. Okay, so if I did a 2750, so if I did a 2760 by 2755 by 2750, then I create a spread here for a credit. So I'm risking 460 bucks. Now I'm risking about $1,000 to make 70. That's a terrible trade. You know, um, they're way better. They're way better. Now, granted, I have a profit trap of $500. That's not why I'm taking the trade. I'm looking for income with a high probability of profit. This is a terrible trade. The probability of this trade is I'm going to make about $60 to $70 per contract to risk almost $1,000. That's a horrible trade. So gold futures probably not the way to trade it. However, GLD, as boring as it may be, GLD offering the first dip in a while and still having room to correct. If I bought some more, I've got to be prepared for like a 16 to 20% pullback on GLD. So if I started small, okay, fine, we'll start small. So if I bought a little chunk of GLD and I buy another chunk of GLD and another chunk of GLD, that's a long-term trade. Do we come down to this level and come back up to the highs again? Do we have more problems where gold is still going to be like the best global safe haven right now? Maybe Bitcoin is going to start nudging its way into that conversation as well. But you just it's like you can't just go all in and say like there's my dip to buy. I think that this could still pull back. I've been talking about this bar count for a long time, and I don't mind taking a stab at this for GLD. But I don't really know how aggressive I need to be. I mean, I'm saying that personally because I have plenty of exposure on CEF, PHYS, GLD, SLV, and Bitcoin, and way better prices than adding more to them now. You know, so I wouldn't mind adding to GLD. I mean, I'm up 21,000 bucks. I probably had a $6,000 or $7,000 swing today. Okay, but if it is going to, fall back into like 290, fall back into 280, then I'm willing to have that conversation. Like this dip, if this is immediately bought, then gold is truly a very, very, very bullish market. But if this is a bit of a pivot to have a little bit more of a correction that pulls back into more dynamic support, then I'm willing to kind of dollar cost average into that. Like, look, a daily time frame still hasn't even hit a 21 to 50 moving average are both pretty aggressive. So if it at least hit a 21, at least hit a 50, and then maybe I'll throw a little allocation. I could throw another, couple $1,000 at it and have this, maybe revisit highs again. But remember, like gold's acceleration is going to be more of like the death of the dollar and major, major global uncertainty. If US and China are going to play nice optically and make the headlines seem like everything's going to be resolved, then gold might lose some of this amazing, safe haven uncertainty status. I also think that central banks that still want to buy gold, that are buying gold, are going to buy dips and not just keep adding to all-time highs. So also keep in mind, do we not talk about how crowded gold is? It actually is more crowded than the Mag 7 was last year, which was 30% of the entire market. So gold has become an extremely excessively crowded trade, which is why I'm a little reluctant to say I'm just going to jump in and buy this dip. I'm not yet. I want to see if it comes back a little bit lower, but I will say that coming back to like the 50 period, I'm willing to throw something in there. A 200 period, absolutely willing to throw something in there. So I will exercise some restraint and see if we can get a pullback. Okay. Silver, on the other hand, yay! Silver's doing better. Here's XAU, XAG. There's a comparison. Did we not talk about this? Right? That at some point, this ratio that has been stretched to a pretty big extreme here for the last couple of years is now showing that silver's catching the upper hand. So this is good for silver, and SLV is benefiting. So SLV is now up, $9,100, and it's been a wild ride, right? I mean, that little jump we had on SLV looks like my diagonal spreads will be looking pretty good. Anyway, call at 34, calls at 33 and 34. I don't think I went out super far in this, but let me check. So SLV, I've got a cover here for June at 33.50. Okay, I will consider rolling this because I don't want to let my silver shares go. I really don't. Um, so I mean, this is out 68 days. Let me check the deltas here on June 30th. So June 30th, 33 is currently trading at a 30 delta. I mean, if we have a one standard deviation move to the upside, then yeah, I might be tested on this side. But I will consider rolling it out in time and up in price. I might even be willing to pay a small debit for that because I want to let this thing run into the 40s. I'd love to hold on to SLV into the 40s. I'd love to hold on to silver into the 40s. Okay, I think there's still plenty of profit potential on SLV to get to 44. There's profit potential on XAG to run up into the high 40s. We had a high in 2011 and a high in 1980. It's been there before. That's what has been attractive to me this entire time with silver is all the way down here. I looked left on the chart and silver has been there. So I'm like, if this structure is anything bullish, we have whatever channel it needs to do, whatever structure you want to look at. But if that's the destination, bring it on. And that, one of the few highlights that I could see some good asymmetry as far as reward to risk. Okay. Bitcoin had a great day yesterday. A nice 2-day run on Bitcoin. We have cleared these recent highs. I will be watching Bitcoin for the following structure now. Now that we've pulled back, or now that we have broken these recent highs, this level and this little choppy zone right here, I'm looking to see if we have a pullback. Look, drag a fib. I mean, this is pretty easy. Look at just some behavior. So take your low, take your high, and if the market pulls back, let's say to the 51%, 61% zone, that puts us right about here. So if we have a pullback on Bitcoin to around 85,000 or 82,400, that's a good window to look for a swing trade if you want to add anything to it. So, I wouldn't mind seeing a pullback and then a push up and then continue higher. I mean, maybe our destination is Bitcoin is going to start making its way to all-time highs. It's fine. I'm not going to complain. But if it hits here for area 1, we got to be prepared also for potential retest of the lows. I still like Bitcoin. I mean, I think it's a good diversifier to have. I think there's plenty of upside potential. Nobody knows how well it's going to do, but there's obviously a lot of legitimate profit target, SPX. About freaking time. Hit full profit target today. Jeez. Wait until 11 a.m. Good. Crikey. Okay, SPX. Trades 1, 2. Profit targets hit $1.85 and $1.85 debit. 2 for 2 with profit target wins. Feels better than yesterday. Yesterday was 2 small winners, and the day before that were 2 small losers. So definitely a bit of a grind, but nice little snag of $100 today. Okie dokie. Let's keep going. How's everybody doing? We all right? We're hanging in there. So who's buying gold right now? That's what I want to know. Who's buying gold? Like I said, I don't mind doing it, but if I were to buy gold right now, I'm going to buy it here and here and here. I can't just say this is my position and put a stop loss. That's so subjective. This market can pull back 20%. Okay. That is how far away we are from these levels. So just be careful. But if we pull back to at least a 21 moving average or a 50 moving average, I don't mind looking at structuring trades on gold futures. I don't mind looking to add a couple more shares into GLD. And I don't mind just holding firm on silver, because silver I think is looking pretty good. If Bitcoin pulls back, also levels to add. Okay. All right. MicroStrategy. I have a cover call on this one, a collar out to 310. It's out into June now, which is okay. I'm trying not to be super, super bullish on anything past the end of June. Like July to December is going to be where this euphoria market becomes a reality if it's sustainable. Because by June, the Fed's going to start cutting rates. By July, we have this 90-day window that was probably just made up. It probably was never meant to be anyway. But it was a pause to get a little relief rally. And here we are backpedaling on China. So July is like, okay, 90 days up. How does everything look? How's the U.S. look as a global trade partner now? Are things better? Things worse? Is it the same? Are we no better off? Are we just stupid and disrupting the entire global economy? Maybe. But July to December, we have more months of inflation data. Fed starting to cut rates. Where are the yields at? Are we starting to see any type of job numbers ticking higher? So if we go to initial jobless claims right here, again, the trend is still not awful, right? So until we start to see these trickling higher, until you start to see continuing jobless claims trickling higher, I mean, you can't see a trend here at all, right? I mean, this is so far, this trend is not giving us any concern for a recession, but do not ignore this, because if we start to see that initial jobless claims, continued jobless claims starting to go higher, not a good sign. Okay. If we start to see in June that the Fed is cutting rates and the 10-year, 20-year, 30-year yields are going higher, not a good sign. Okay. So from a macro perspective, what is nerve-wracking about this current environment is that the US is doing things that might even resemble a emerging market, which you'd never think that the US would be an emerging market, but it is trading like an emerging market. If we have to see our yields increase to attract back foreign investors and foreign debt holders, that is what emerging markets do. Okay. That's really, really damaging if that's all of a sudden what the US has to resort to. So I hope that's not the case, but these are things we have to be watching. Okay. Lee says I was on the gold sales and felt strange clicking the red button. I mean, I think that red button might be pretty short-lived. Um, but having said that, look, if the markets are going to rally, if we get equities to rally, I mean, and we'll go across the board, right? Like we're doing a lot of U.S. instruments right now, but across the board, if the globe is up, I mean, go to the heat map right now. Okay, you have 84.4% of stocks advancing in the U.S. You see some red. Okay, let's see where things are shifting. You're going to see all your defensives, all your crazy, staples. These are all going red today. So Coca-Cola down slightly, Procter & Gamble down a little bit, Clorox down, or Colgate-Palmolive down, Pepsi down, energy, XOM, CVX down, healthcare. That's interesting. Bristol Myers Squibb, I don't know if they have earnings today, but they're down a little bit. But there's a lot of green, right? Nvidia's making a big comeback back above $100. I mean, whatever, it's fine. Microsoft back to 379. Apple back above $200. Amazon making a nice little rip up, almost 7.5% today. Tesla surprisingly had a terrible earnings report. It's up 7.62%. Why? It's one of the most liquid and highest volume option trades in the market. And so being down almost 60% from peak to trough, well before earnings, a lot of the crap was priced in. A lot of the negative was priced in. I think Elon Musk is done with Doge in a couple of months anyway. And I think everyone at Tesla, every investor rather, is like, go back and do your job, right? As they say, don't quit your day job. So if he's a Tesla guy, if he's a SpaceX guy, is it League of Legends? Like what's the video game that he claims to be a master at? You know, how does he have the time to do all this stuff? He doesn't. Anyway, but Tesla's up and a bit of a contrarian play, even with the miss in earnings, but a lot of the bad stuff was already priced in. I'm sure there's some optimism there. It's like there's still the robo taxis in summertime. I think June is a rollout. They haven't delayed that. Deliveries are down, revenues are down. Everyone's vandalizing Teslas across the country. It's like it's awful. But what are you going to do? One thing I thought was interesting too is the EV space has played a lot of catch up in the last decade. I mean, I think since what 2015, 2016, 2017, when Tesla started to emerge, um, not much has changed for a Tesla vehicle. I mean, China right now, BYD is the big threat because they're making more cars and cheaper cars, and they're starting to, have a bigger market share. So, I mean, if Tesla really wants to be competitive, I'd like to see some innovation. I'd like to, but who knows? Anyway, if I get it called away, I just want to make some money. That's all I want. I'm an income trader, um, trying to generate the income. And if Tesla gets flipped this week for a couple bucks, freaking great. All right. Anyway, jobless claims and initial jobless claims, continued jobless claims. We have to watch these trends. This is what makes me nervous from July to December. If these start to tick higher, that is the question of soft data becoming hard data. That is the question of this U.S. potentially facing a recession and real recession risks. Meanwhile, that's why I think gold, as Lee said, felt weird to press the sell button. I think gold is still a good trade for 2025. And the crazy part is we could be talking about a gold bubble that has no upside cap. Gold could be $4,000 an ounce, could be $5,000 an ounce, could be freaking $10,000 an ounce. So I'd rather participate in a bubble like that than trying to call the top. All I'm waiting for is a technical dip. And hopefully we're starting to see the signs of it where I can get a chance to participate in something by exercising some patience and not feeling like the only way I can get gains on gold is by buying freaking all-time highs. So I'd like to see a pullback. So today feels a little bit better. It feels a little bit more normal. It is nice to see in currency strength today that we have the Swiss getting weaker and we have the Aussie New Zealand top. We certainly have some risk on flows today and some decent volatility, so that is helping. I am making some adjustments in my portfolio for the Swiss pairs that I'm in. So New Zealand Swiss is already starting to make a nice little comeback. I'm going to try to get into this one. So let's see, try to get a pullback here. I mean, I'd love to see the New Zealand Swiss give me something better. So I'm going to go limit order at around 49.50. $49.50. 49.07. So pull back there, and then another one to load up at the bottom, which is around 4,700. So another limit 4707, no expiration, back at the lows. And I'm still going to move a lot of my stops lower. So this one on dollar Swiss is looking okay. I'm going to put in another trade here on dollar. This one's certainly not done, but help the break-even price a little bit. Okay, so keep an eye on this one for the dollar. If we come back down to lows again, that would be around 80. Limit buy. Okay. All right, so getting those trades surrounded. So Aussie Swiss, I put a buy limit down at the lows around 50, 55 on Aussie Swiss. Let me get a chart up here. So Aussie Swiss, I'll go some currencies now. Yep, I'll go through all the currencies. Give me a sec. So I'm putting in, so I'm positive on Aussie Swiss, and the place I'm looking to take profit is, look, I want to be fairly aggressive here, but these buy stop orders, as I said the last week or so, unless we see here's what I'll say. If we go up to this pocket, I'm going to cancel these trades and just take my profit and then look to reestablish a whole new pattern trade. Because if we go from this low all the way up to this pocket or all the way up to these highs, I think that is a wave one. And if that's a wave one, I'm looking for at least a 3-wave move. So I'm looking for this to be a wave one. If I get a pullback, I'm going to take these orders and cancel them and level myself back into a wave two, and then look for a push to symmetry on a wave three. And so what I'm trying to do now is, if I can take some profit here, so if this goes up and finds my pocket, I'm going to take the profit off that trade. So I'm already in to about just over half a standard lot. Netflix is crossing new highs again. That's good. Let me see if I'm going to try to close this trade out if it's showing some profit. Netflix and Verizon. Netflix is, come on, dude, show me something good. God, I'm freaking $15 clear. I'm $17 clear on my break even, and I'm only showing like $30 for it. Netflix, you freaking turds. Right now it's trading for about 350. Gosh, the bid is 121 and the ask is 557. Obviously, it's a $5 wide. I know I can't get that, but it's like, just give me something better than 340. All right, I'm going to put in a $4 credit, make an adjustment. Netflix is retesting all-time highs. Not bad. All right, back to this. So point is, if this continues to go higher, to me, this is eating into these inefficient candles. That's great. I'm going to take some profit there. I'm going to call this a wave one. If this is all a wave one, any type of pullback on wave two, I want to start dollar cost averaging into that for a swing wave three. That, to me, has been how I've made a lot of money in the currency market. I wait for these big time frames. I wait for these big patterns. I wait for these big extremes. And even a 1, 2, 3 wave move, I add a lot of trades on that third wave. And symmetry is a lot easier to trade to because the market hits it all the time. A, B, C, D. Easy. And yes, there's going to be sub swings, and it could be, this kind of imperfect wave structure as it goes through. But if we ultimately get to symmetry, there's a lot of money to be made there. So that across the board, from Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, Dollar Swiss, that would all work out pretty well. And if gold continues to make a correction, this should probably be a trade that plays out pretty quickly. All right, so getting it surrounded. All right, let's do some other currencies here. Aussie CAD. I'm still holding long Aussie CAD, and this support level was really great. 8,600 is up 260 pips. I'm just going to sit and wait. I'm going to ride this out to hopefully 93 to potentially 9,500. Again, if this is a wave structure, 1, 2, 3, 4, 5. Something along these lines to go from these lows to these highs, and it's just a move. But I'm going to have the patience to hang into it. Aussie CAD, Aussie Swiss, I just did. Aussie Yens, Yen pairs. You're not going to get me to really love these much. We're probably getting some risk appetite, which is going to weaken the yen. Aussie New Zealand, I'm looking to dollar cost average in. So down here towards 106. SPX just got filled. The hell, I thought I did both of those. Hang on a second. SPX. There we go. So this trade closed out. So $1.85, $1.85. Yeah, so that was 50 and 55 bucks per contract. Not bad. This trade hopefully is see if I can close this one down. Well, that was quick. The day is not done. 1, 2, 3. Okay, so that butterfly, if we somehow get to 5,500 today or 5,490 today, this trade can still show some profit. Okay, I'll keep an eye on that one. Okay, Aussie New Zealand. I'm just going to put in some horizontal levels. These are where I'm going to start buying some more. So horizontal ray down here around 106. Down here at 103. And down here near parity. I will buy these levels. And this to me is just a large range trade. Aussie dollar. I mean, there's no real analysis to do here. If you were long Aussie dollar, it's time to protect your profit. It's as simple as that. I mean, we called getting long at the round number at 6,000. It was breaching that briefly, and then it ripped up here 400 pips. You had a great opportunity to get long Aussie dollar. At this point, all I'm looking for in the Aussie dollar is because we have this low to this high, if we have a pullback, you can see that this would be a good spot to potentially add to it, swing trade, and see if the dollar does continue to weaken, then we have room to go to this next level of resistance. So a consolidation zone could be a push into open space, and we go from 64 to 69, but it's going to come hopefully with a little bit of correction first. CAD Swiss, watching for a bottoming pattern, same thing. If I get to my break even is right here. If I get a retest of this high, I'm probably going to take a small profit there and then reposition for a swing trade. 1, 2, and start adding in on swings and retracements, stop loss area below, and then look for a wave 3. So these all may be shifted in the coming weeks if this sets up the way that I intend, which would be some type of like head and shoulders pattern, some type of crown pattern, some type of bottoming pattern. I just want to see that develop, and then I'll start repositioning for it. CAD yen, if it's risk on, this is probably put into some lows. This could offer a pretty good trade, to be honest. If you're willing to buy CAD yen, not get faked out at the lows. That's the tricky part, is don't let it do too much damage there below the lows. It might spike, it might test. It's not going to be easy, but as long as it doesn't invalidate with like a daily or weekly candle, this probably has some pretty good looking upside, at least in the near term, just to see if this is range low, and we just have another big range, right? Nikkei's in a range, so it makes sense that some of these yen pairs, forex wise, are in range too. Let me double check my calendar today. Okay, I'm good. Just double checking. Swiss yen, I don't know. Whatever you want to do. I don't like this pair. I talked about potentially this high being a sell trade, this high being a sell trade. I just don't like negative swap, so I'm not taking the trade. I was in this trade earlier when we had this first swing. I sold it around a 5.0. I took profit. I didn't take it to symmetry because it didn't hit symmetry, but I took it down to the lows and I said good enough. So I took that winner. Now I'm out of it. I do think bigger picture though. This is probably a topping pattern. And if this is a head and shoulders trade, this neckline breaking does mean a lot more downside. So I'm hoping that's not just Japanese yen getting stronger, but rather the Swiss getting a little bit weaker. But even if it trades in a range, that's still a good looking trade if you like it. I personally am not taking it because I don't want to get the negative swap. Actually, I take that back. If you're Swiss yen short, you're actually getting a positive swap. But still not going to take the trade. It's 0.25%. I like the other pairs where I'm getting like 2 to 2.5%, 3% swap. Euro Aussie, I was hoping we have a pullback here. We're not getting it. Euro CAD is cooperating. the divergence in the overbought conditions is cooperating. So watching that one closely. Euro Swiss is cooperating as well. Again, maybe this whole thing is a low to high, higher low to higher high. If that wave 3 comes to fruition, I am out with lots of profit. So I'll continue to build this one as I can. It's going to be patience required, but the nice thing is break even is here. I'm not getting super aggressive right now. If it pulls back, I'm going to add some more to the bottoms. I'll add some more. I'll add small positions, but I'm gonna fight the good fight. Okay. Joe says, how do you trade oil and Bitcoin in times of hiking or cutting rates? Just stick to the charts, man. I mean, I don't once think about oil and hiking or cutting rates. Bitcoin, I don't think about hiking or cutting rates. Bitcoin is now starting to show its ability of it's no longer the same vol and risk profile as it once was. I think that when you put BlackRock in the ring, you securitize it. I think that it's actually stabilizing a lot more now than it was before. Cutting rates and debasing the US dollar is probably a good long-term play for Bitcoin, just like gold. Gold has, I mean, historically, gold has not served as a hedge for inflation, but rather a kind of a hedge on just the S&P. S&P has been down, gold's been up, but it's not really an inflation hedge because we've seen terrible inflation, gold perform poorly. But oil, I mean, oil to me has very little to do with cutting or hiking rates. Oil is all about supply and demand. So, conflict in the Middle East, the concern going into the Trump administration in 2025 was drill, baby, drill, deregulation, just open up the Keystone Pipeline, project in Alaska. We're going to take over Greenland. It's like, whatever. So oil prices, why are oil prices, why is that the focus of the U.S. to drive oil prices lower? Energy prices lower. That's the sticky inflation, right? Don't we have inflation? We have CPI data, core CPI, and we have super core CPI, right? I mean, all these things are just like, well, what makes the data look bad? We'll just get rid of it and call it something else. So we have CPI, core CPI, super core CPI, and when you get rid of energy and food and housing, it's like, I guess you can show that, hey, there's not a lot of inflation. But all the things that have it, they're just like, just don't use that data. It's too volatile. So anyway, oil prices to me are supply and demand. Bitcoin, I think Bitcoin's great to have in the portfolio. All right, Euro pounds, robot trading that one. Euro yen, no trade. Euro New Zealand. If it's just going to continue to slide lower, there may not be an entry here. There may not be a pullback like I'd like to see. This might just go down and down and down and down and down. And in a very kind of classic Forex fashion, which is price goes up super aggressively, price finds a way to deflate. It gets ballooned and then it gets ventilated, right? The air gets let out. So, I'd like to see a trade where high, low, lower, high, lower, low gives the chance for traders to jump in with a swing. But if it doesn't happen, then I still think that this is probably heading lower. Pound New Zealand, same thing. Euro CAD, Pound CAD, same thing. Just, you're looking to follow a shorter time frame. Euro dollar, I'd said, take your profits because we're probably going to pull back, and we are. Here's a 2-day pullback on the euro dollar. Minimum pullback wise, I would just look at this. Look at a big swing here. I wouldn't be surprised if the dollar does continue to weaken in the medium to long term. But right now, even taking that swing right there, or even taking a fib, actually would be more symmetry, go from this low to high. Okay, I'm going to be a little conservative on this, but I'm going to go to that swing, and I think the euro dollar could potentially hit. I mean, we almost hit, man, we almost did. From this conservative swing from the, 95 zone, we almost hit symmetry around 1670. So crazy stuff. Well, let's do this. If you like the euro dollar long, I'm hoping that you're, out of this thing with some profit already because we did get overbought conditions. But I'm Aussie CAD long. I've been Aussie CAD long since 86. So I'm not selling Aussie CAD. Euro dollar pullback. Look at the fibs. So we go from low to high. If we have a 30, 38, 50, 61, I'm not saying I want to add into all those levels, but what I'm saying is if we watch this daily structure with a 1 or 4 hour chart, look to see if this offers up a buy zone. Do any of these big fib numbers offer up a buy zone to confirm to get in on a swing. Stop loss would still be down here, but project that higher. You can get to the 18127 swing. You can make a lot of money right there. You go to the 1618, you can make a lot of money there, right? So I still think this is set up for, if dollar weakness persists, then we're probably going to get a decent pullback. The nature of this euro dollar, I mean, do not be surprised if this euro dollar pulls all the way back into these lows, which is around 107 or so, which is a 618 to even a 786 pullback zone. So does that mean I want to short the euro dollar? Of course not. But if it comes back up to the highs again, and that's resistance, I would look for a short-term entry and try to get a really nice topping pattern to trade this back into these retracement zones. So there's two ideas for me on euro dollar. One is right now, wait. If it comes into these areas, I wouldn't mind buying it. Okay. If it comes back up to the high, I wouldn't mind looking at another rejection and then trying to sell this thing as high as possible for a pullback. Okay. All right. Pound Aussie. I'd like to see a swing trade. So high, low, I'm looking for a lower high in here, right around like 2.11, 2.12. Pound CAD. Keep an eye on it, but ideally this would be setting up like the Euro CAD, which is we retest the highs. I think the Euro CAD is a slightly better trade than the Pound CAD right now. Pound Swiss, I still like long into this like 112 handle and 113 handle. Pound Yen, no trade. Pound New Zealand, I think we're just coming down to the 200 moving average. I was hoping we get a pullback to around 2.27, 2.28, but that's a long ways off. The other trade on Pound New Zealand, since we're close, is we come down to this 200 moving average and we bounce there. So if you're patient, looking for a bottom in here, or some type of pullback and squeeze to maybe set up a swing trade for a sell-off. But again, volatile currency pair. I don't just dollar cost average into a pair that can move 200 pips a day. So be careful. Pound dollar. What did I say? 11 candles in a row. Take some profit, trail some stop losses. That's now most likely going to get stopped out, which is fine. It's been a great trade. This thing ran from 2,700 to 3,400. That's a 700 pip move in 11 straight days. Great, but now where's the pullback? I don't know. Is it gonna stall here and pull all the way back to the same level? Maybe, so I mean, is this a larger bullish pattern, by the way? I don't know. I mean, nobody can tell me that the UK is in a better position than the US right now. I don't think it is. I think the Eurozone's probably better positioned than the UK, maybe. And structurally, this has not been my favorite technical trade. Euro dollar has been a little bit easier to read than pound dollar. Margins are easier on euro dollar than they are on pound dollar. So I don't know. Just be careful. If you're long this one, obviously take your profits, trail it, and you're good. New Zealand CAD, I'm still long. So bought in at 8,000, willing to buy back in at 77, and taking this up to range highs around 85 to 86, even up to 87 or 88. New Zealand Swiss. Same thing on the other Swiss crosses, watching to see if I can form a bottoming pattern. If this is a wave one, I'm looking for and hopefully this wave one hits this 200 moving average. If we go wave one, where we squeeze all the way up here, take out this high, 2, 3, 4, 5. I mean, if I can make money here, like I'm already in profit, but if I can make money on this third wave or make money into this first wave, we get up into my 200 moving average, I can take this profit off the table and be happy, right? And then if this is a swing, load up for a 382 to a 786 swing, go to symmetry and make more money there. So there's a couple ways to trade these Swiss pairs still. By the way, just watching this in the last 20 minutes, here's what the market is doing. We opened up with a huge gap, and what's the market doing today? Fading it. So how bad does it get? Does it come all the way back down to fill this gap today? I hope it doesn't. I think we'd be very lucky to see that we gapped higher and we actually stay here for the day. Okay. But if it doesn't, then it just shows you how much these bears are not messing around to have a day like this where it's like the market's up 3% and now it's, going flat for the day. But we'll find out. Time will tell. But I'm out with my day trades and I'm out with profits, so I'm happy. Futures, one thing to watch on futures would be right here. Do we fill this gap? Futures market usually doesn't have a lot of gaps, and if it does, they fill them. So if futures comes down and finds this level or fills this gap, well, there's your inefficiency. Okay, so we are coming back into, I think the session VWAP is now prices below it. So we started above it for the morning. but really noisy. And now we're back below the session view up. I think that's the session view up. Yep. And then we have the weekly view up down here. All right. Anything else? New Zealand Swiss, New Zealand yen. I like CAD yen. Actually, if I'm picking a yen pair, that actually looks decent. The CAD yen is so close to the lows that might offer some good reward to risk. New Zealand dollar. Move your stop losses, protect your profit. It's nice to see this thing going higher, but the dollar is probably going to still cause a pullback. Dollar CAD, a bit of a bounce here, but that's not a bottom. I mean, this is not a bullish pattern. This is nothing. Dollar CAD to me is, down here. That's where I'm going to buy more dollar CAD. In the middle, maybe a pattern if I see it, but that's about it. Dollar Swiss looking better, but still a long ways to go. Big pocket here to fill, and possibly. I mean, the right side of the trend line is when the coast is clear. Otherwise, being very patient. Trying to put something in near the lows and see if this just finds a way to, carve out some type of bottom. Find a swing trade back up. I don't know. I mean, I'd be very lucky right now if we go back to 9,200. I don't need it to. My break even on dollar Swiss is around 8,500. So if we come back and fill this pocket, I turn dollar Swiss into a, I'm not going to say very profitable. Like this was really profitable for me. That was over a year and a half to 2 year trade, and there was a lot of pips. This next tranche of trades that I'm in, this next batch is if we get back to this pocket, which is around 8,800. Then sure, I bought low here. I added at the bottom, and I'm going to add some more down here just in case, but I can turn that into another little chunk and be okay. Just another profit. So we'll see. Dollar yen. I don't think anybody should be surprised that it's holding the lows, right? I said be careful that we're closing in on symmetry, probably offering a better buy trade than sell trade right now, and maybe in the near term it might be a little noisy, but I think in the near term we might see this thing carving out some lows and then looking for a little relief rally. So we'll find out. So, all right, I just did all the currency pairs. And markets have faded a little bit today. So the S&P is still up over 2%, mainly due to a gap. The 3+% has faded back down. The Nasdaq was up over 4%. Now it's at 2.83. The Dow was close to 3%. Now it's 1.69. So we've trimmed about half the gains today. Russell compared to VIX. Look at the VIX. Gapped lower, still higher. We're still in backwardation on the VIX. Bond volatility going down. We had a gap higher in TLT, but it is fading hard. So this, I mean, again, this is a lot of volatility in the bond market. Gap higher, but fading. The nice thing is as long as TLT is not making fresh lows, that's probably somewhat encouraging. If we go to ZB, that should be Treasury bond futures. Trading at 114. I've seen a lot of traders trying to get long bonds around the 112 handle. So, I mean, for scalpers, like, yeah, that's good. That's a good trade. And then before we go, take a look at S&P. Okay, look at today's candle. I mean, if you don't think resistance is a real thing, it's right there. What did we do today? We came back in just shy of the Wednesday high. It's just noise. I'm telling you, like, this market is still not convinced we're going really anywhere. Now, is it bad enough where the market's going to go all the way back down and retest the lows? I don't know. I don't think so. This market might just have a, run up today. I mean, does it come right back down? I don't know, maybe. But if we just fill a gap, it's like the bulls have to just step in. If we come back here and fill the gap, but the bulls step back in, then maybe we get back up here. We still have earnings next week. Earnings could show some stability. I think Trump should just keep his mouth shut for a couple weeks and let the market do its thing. So we'll see. Or if he's going to say anything, say something positive. As they say, if he can't say something nice, don't say anything at all. Golden rule. Words to live by. All right, I'll let you go. Have a great day. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.